Okay, so as usual, we'll start off by looking at the economic calendar, see what's coming up today. So let's bring the economic calendar up. So today is Tuesday, the 9th of February. The main market we're looking at is the Euro US dollar. So we're looking for reports of high importance that could affect the Euro or the US dollar. And also note reports of medium importance, just in case they could have an impact on the markets. So let's have a look. Again, I'm using GMT +2 time. So all the times I'll be quoting will be GMT +2. So let's have a look. So at 9 o'clock here, we have the reports of medium importance drawn from Germany, balance of trade. I mean, that won't stop us trading, but it might be a good idea to check the markets around that time. We can ignore reports of low importance. We can ignore Italy, sorry, Italy, and ignore that reports of low importance. That's from Brazil, so that doesn't affect us. That's Mexico, that doesn't affect us. And it's all reports of low importance, which we can ignore. And then this is the Fed Bullard speech. Again, it's just a speech. It's not an economic announcement. But again, usually when anyone from the Federal Reserve speaks, they will note it as medium importance. But they're usually very guarded with their speeches, so they rarely affect the markets. So basically, there's nothing due out today, economic report-wise, that could affect the market. So we can go ahead and start trading straight away. And as usual, technically, you can start trading from midnight when there's no reports of high importance due out or no public holidays, because there are no public holidays today, no public holidays in the UK or the USA today. But next week, Monday is President's Day in America. So there's a public holiday in the United States of America next week, Monday. But anyway, that's still next week. So, but for this week, no public holidays in the UK or USA. As you can see today, and no reports of high importance. So nothing stopping us from trading straight away. Now, like I said, technically you can start trading from any time from midnight on a day like this, where there are no reports of high importance, no public holidays, nothing stopping you trading. You can start any time from midnight, or as early as you wake up in the morning, up to you. But as usual, we'll also quickly look at the next 7 days. It's a relatively quiet week this week. Tomorrow, which is Wednesday, we have the German inflation rate report tomorrow. But again, that won't affect us trading today. And then the United States inflation report tomorrow. So tomorrow is inflation report day in Germany and the US. And then on Thursday, nothing. And on Friday, we have the UK GDP growth rate. So it's a relatively quiet week. So let's come back to today. So nothing stopping us today. Let's have a quick look at Market Watch to see if there's anything untoward going on in the markets. Of course, we know the current situation with the COVID pandemic, the vaccine rollout, all that is not news anymore. I think we'll have to learn to live with the COVID virus like we've learned to live with the flu virus. The flu is part and parcel of life that we've known it. Everyone has the flu vaccine every summer. Flu still the flu virus still kills people every year, and we just learn to live with it. Same with malaria in Africa, you just learn to live with it. I think COVID will become that. It's not something that will completely disappear. We just have to learn to live with it. But I think, yeah, in terms of uncertainty, it's not really a huge. There's nothing uncertain about COVID anymore, really. We all know about COVID, the vaccine, the rollout, the implications. So we won't say there's anything new causing uncertainty in the markets. So let's see if there's anything else other than that. Again, we're trading currencies, so this is all to do with most of the news you see here is to do with the cryptocurrency market, which is trading really, and the stock market. So there's nothing really in the news to cause us any undue concern from a currency trading point of view. Okay, so let's go to the platform. Okay, so again, like I said, it's always good to follow. Let me start with swing trading. So we start with the daily time frame, D1. So from a swing trading point of view, we're still in the sell trade from the 15th of January, where we sold when the market broke the moving average there. And we're still in the sell trade. But today, this is the candlesticks from today. So the moving average today is 1 point, again, on my own platform, IG platform. It might differ on your own platform if you're using a different platform. But for my own IG platform, the moving average today is 1.2161. So I'm just going to move my stop loss 2 pips above that to 1.2163. So I'll just adjust that just by 1 pip to 2163. That's it. So that's it done from a swing trading point of view. Then I will reassess again tomorrow morning. Let's go back to the 5-minute time frame. So looking at the 5-minute time frame, yes, so I was saying yesterday, the reason why it's good to choose the market you're going to trade and monitor them on a daily basis. That was the sideways trend yesterday. And then you can see it broke the sideways trend early hours of the morning, this morning. Broke it there, broke the first resistance, and it's now trending sideways there. So we can now ignore this sideways trend. So like I said, if you follow the same market, it'll be very easy to tell when one trend starts, when one trend stops, and when one starts. So now I can easily tell that this is now the sideways trend, and we can see the R1 is below it. So you can see I already have a pending sell order just below R1 with a 20 pips stop loss and a 60 pips profit limit. But again, we can't use R2 to trade. So because if the market goes up, the only point we can buy using the pivot point strategy is to buy above R2, but you don't use R2 to trade using the pivot point strategy, because the market tends to trend sideways around that point. So there are no buy opportunities at the moment, just a sell opportunity to sell below R1. And like I said, I've already got my pending sell order just below R1. So that's my plan for today. See what happens. Any questions? If you have any questions, you can either raise your, oops, yep. Morning, Mola.
Good morning, how are you?
Fine, thank you.
Yeah, I have 3 questions, but I'll start with number 1. So looking at your daily this current screen, so you have said, and I cannot totally understand the logistics. So the moving average is not even above, is not above anyway. So we can't really buy. So but it's below. So we can buy, we can sell below the moving average. So I understand that. So you have said that you've placed your order just below R1. Again, it comes back to this old chestnut, because I thought I had it sussed, because I did something similar yesterday. I was in a situation whereby I could have placed it between above R1 or above the pivot, but I placed it above the pivot. So the market came, it moved so quickly, it took my order and then crashed me out. So what you've done today again I'm struggling. I thought to myself, okay, maybe it was too close to the pivot, but what you've just done, I don't know if I'm making sense. You've placed it under R1. Why not just place it under S1? Because based on what happened
S1.
Sorry?
Did you say S1?
Also, why not place it under the pivot? Why did you place it under R1? Because I'm kind of thinking that the market can show some volatility, and because R1 is quite close to where your opening level is, again, it can just take it and then just knock you out of the market. Because based on what happened to me yesterday, I would have entered on slightly under the pivot line. I can't see what the pivot line is at the moment. I don't know if I'm making sense.
Yeah, you do. I want to see what happened yesterday because I'm still struggling to find out what you did yesterday. Because yesterday, just give me a second.
So I placed 2 trades yesterday. So I placed the first one, like I said, in that scenario, was just, I think it was just above the pivot line, and it took my order, it was hovering, took my order and then just crashed me out. I was like, oh my God. And then I placed the second trade, which was above the R1. Again, I mean, I still lost that trade, but I felt more comfortable with losing that one.
Okay, let me just, so let's go back to yesterday, because looking at the chart yesterday, although I'll go back to today and say why I did what I did today. But yesterday, are you using the IG platform?
Yes, I am.
Okay,
yes.
Because yesterday in the morning, the market was trending sideways and the pivot and S1 were within the sideways trend. So that's why I didn't use them.
Okay.
So that was the reason. It was simple as that. And that's why I only had the buy order above R1.
Okay. Maybe I should have mapped out the sideways trend so I could have got a better understanding of my support and resistance.
Yeah.
So maybe that's where I made a mistake. Okay.
So that's what I was trying to figure out, because yesterday, I mean, yes, like we know in trading, you will get losses, because even when the market did eventually go up and take my buy order above R1, I still lost out on that, which is fine. But yes, that was the reason why I didn't use S1 yesterday, because it was within a sideways trend.
Sideways trend, okay.
But I have an idea what you're saying. I mean, today is different. I know what you mean. So for example, now, if there was a report of high importance due out shortly and the market was close to this, then yes, I'll be a bit nervous putting my sell order there.
Okay.
But because, like I said earlier, again, that's why your question is very good. And you should keep asking questions like that, which are very good. Because like I said at the beginning, there are no reports of high importance today. You know, there's nothing happening in the market today. There are no reports of high importance. There's no public there's nothing happening. So I can just go ahead and do that. So when I was talking about increased volatility, I was talking about that one is in relation to just before a report comes out.
Right, okay.
So yeah, but there's nothing happening now. So that's why I could comfortably put my sell order just below R1.
Just below R1 and not below the pivot point.
That's far away.
It's too far away. Yeah, I know. But yeah, but like but based on various scenarios that have happened, yeah.
Yeah.
Okay.
But I think the first thing to do is, just like you said about yesterday, the first thing to do is determine the trend. That's number one. So again, it's doing it systematically. So like I showed you earlier, initially from yesterday, the market was trending sideways, which I'd already marked it out from sideways trend. So that's number one. Before you yourself think about where you're going to trade, first clarify where the market is trend-wise. So from what I did this morning, as you can see, when the market broke this sideways trend, it shot up and then side trending sideways. So like I said, this is no longer needed because it's been broken. So let me make it big actually. So I can also, okay, fine, that's broken. It's now formed a new high there. And that's the low there. So I can now say this is now the new sideways trend.
Right.
So that's why the first thing you do before you trade is determine the trend. That's number one. So that's first step, is just determining the trend, period. Don't be thinking about your entry points. Don't be thinking about anything else. You just say, okay, well, what is the trend of the market? So now that I've determined that this is the sideways trend, I'm now saying I don't want to trade within the sideways trend.
Okay.
Now, this is where the market is. Okay. Now, if the market goes up, where can I buy just outside the sideways trend? The first place I can buy is R2, which I can use. So, of course, that's out of the question. So, no buy opportunities. Of course, if the market itself forms a market resistance, that's a separate strategy. So, again, the market is here. Where's the first point I can sell? This is the market here. And I need to, if I'm going to sell, I want to sell somewhere below the moving average. So the market is here. The first place I can sell just below the moving average is R1, which happens to be outside the sideways trend. So that's why I'll sell there. I won't, why go all the way down there? That's the first, because again, remember the principle of market support and resistance. This is the first place that is below the market. So this is the market here. This is R1 is below the market. So R1 is acting as a support and it's outside the sideways trend. So that's the first place you will go to sell.
Okay. Okay. And that leads me on to my second question with regards to the reports. So I did my analysis. I looked at the whole report of the week and made a note of the various reports and mapped out, okay, so there were 2 reports coming out on Wednesday, and then I believe another 2 on Friday. And of the 2 that were coming out, we had the inflation reports and we had the GDP tracker reports, and they were of high importance. And of course, we know those that are key reports that could have an impact on the market. So I was thinking, okay, looking at the whole week, what's my strategy? My strategy is if there are a number of high reports coming, I don't really want to be trading within it. I'll probably just trade once a day. But again, I guess my question is that at what point do you make a general rule of thumb? Because you've said that, this week is not so heavy with regards to records, so there's nothing that's stopping us from trading, following our normal kind of trade of three shots at the market, if possible, depending on what the market is saying. We can go ahead and trade. But I was kind of like, we've got a number of high reports coming out, so I need to be a bit modest or cautious in how I trade. So is it less about the number of reports, but more about the types of report? But these 2 reports are GDP and inflation, so they are quite important reports that could have an impact on the market.
Okay, that's another very good question. So it's type of report, not the number of reports. So like I said, the two reports that you were wary about, the main one the main one is interest rates. And the currencies are very sensitive to interest rate decisions. So interest rates are huge. That's one you will always be careful about. So interest rates. Now, when it comes to interest rates, obviously the US interest rates is the one that tops everything. So the week where you're having the US interest rate decisions being announced that week, it usually comes out on a Wednesday or Thursday, Wednesday. So if you have a US interest rate coming out on a Wednesday, when it tends to do, then that week leading up to Wednesday, you might only want to take one attempt at a time. Then usually the European Central Bank interest rate decision, that usually comes out on a Thursday. So again, same thing to your trading the Euro US dollar. So when the European Central Bank interest rate decision is coming out that week, you want to be careful trading leading up to that report. And again, that usually on a Thursday. So you might have to be careful, just one attempt a day till Thursday. So interest rate decisions, yeah. Then the other one you want to be wary about, which is the one we did last week, is the US, or just the US unemployment report, which tends to come out the first Friday of every month. So those are the sort of reports, the key reports that would make you be very cautious trading that week leading up to them. So yes, so it's just those in relationship. Okay, let me put it in specifically in relationship to the euro US dollar. So if you just want to specify to the euro US dollar, those are the three reports you want to be worried about trading that week leading up to that report. It would be the US interest rate decision, which tends to come out on a Wednesday evening. The European Central Bank interest rate decision, which tends to come out on a Thursday afternoon. And then the US unemployment rate or non-farm payrolls, which comes out first Friday of the month. So yes, those are the three reports that will make you be very careful trading that week leading up to that report. Those are just those three.
Okay, lovely. That makes sense. Okay.
Yeah. So yeah, you're right. It's not you're right. It's not the number of reports. It's those three key reports that will determine that. And we don't have any of them this week. So yeah. So again, I like your questions because, like I said, with trading is how you put all this information together. Because like you rightly said, sometimes when I'm trading, it might seem as if I'm a bit scattered with what I'm doing. but like you said, yeah, if you don't ask the questions, you won't understand. Because yeah, sometimes, there's so many things in my mind when I'm trading that it takes questions to pull it out. That why do you, and that's why I said even during the course, to always ask the question, why? Now, why are you doing what you're doing? Why did you do that? Because sometimes there's so many things in my mind that you're just doing it automatically without thinking because I'm just used to doing it. That unless someone asks me a question, that okay, then I might then be able to clarify why I did that. So like I said, this week, because we don't have any of those three reports coming out, that's why I'm not saying about only having one attempt today. And of course, like we did leading up to the US elections, we did the same thing too. Because of the uncertainty with the US elections, we are only having one attempt a day until that situation was resolved. So yes, so every time is taking all the factors into consideration. So yeah, there's no uncertainty in the markets. There's nothing creating uncertainty in the news. There is no public holidays this week. There's no interest rate decision. There's no US unemployment rate. So yes, this is a week where we can just trade normally, have our three attempts at an appropriate time without having to worry.
Okay, lovely. Thank you. And then my final question is this moving your stop loss to your opening. I've tried to do that. So what I tend to do is that when I've had my order and I'm sticking to my trading plan, like, okay, so after 6, let me just move my stop loss on, my order is live, let me move my stop loss to the opening, and so that I say if it does drop, I'm not going to lose too much money. I've tried to do it, and how I try to do is that I click on the actual order itself, then it opens up to modify order. Then every single time I try to move it to what I think is the opening, it doesn't do it, and I'm like, what am I doing wrong here?
No, yes, I know what you're doing wrong, because obviously we've been trading together. Because we haven't had a situation recently where the market has moved enough to enable you to move. Okay, let me actually bring the whiteboard. It might be easier to do it with the whiteboard. Okay. All right. So let's say, for example, you buy at this level. So you buy, let's just say, at 1.2032. Okay, so your stop loss is 1.2012. Yep. And then your profit limit is 1.2092. Okay?
Yeah.
Now, so you buy at this level. Now, if the market is just around here, around between 1.20, let's just say 36, Yeah.
Mm-hmm.
So it's maybe it's 1.2036 or 31, or you're losing maybe 2 pips or whatever. You will not be able to move your stop loss to the opening level, because it's still, number one, you can't move your stop loss to the opening level if the market is below your opening price. That one is standard.
Okay.
And so you can't do that. So for example, if the market is at, if you're losing 1 pip, the market is at 1.2031, and you want to move your stop loss to 2032, that's just not physically possible.
I was actually at 15. It was showing me okay, because my orders are based on 50 pips. So I was actually on 15. I was like, okay, that's half of 30. You know what? If it drops in, at least let me just get that £15 secured. And I couldn't do it.
If it's 15, you should definitely be able to do it. So that one, I don't know what's happened.
Yeah, so I was wondering, then I was speaking to my cousin, we're trading together, and she said that, or maybe I was supposed to actually click on the line where it shows my order, that maybe I was supposed to click on the bit where it says stop loss and then highlight that, rather than just clicking on the whole line and going into modify or delete order.
Actually, I can show you what I mean with this one, with the Euro US, with this our swing trade order. Although I wouldn't actually modify it, but I think yes, like you rightly said, if you're at least 15 pips from your opening level, or that one, you should definitely be able to move your stop loss. And like you say, it's just to right click over your order, you select modify order, and then just change your stop loss to your opening level.
I did that and it didn't work. Maybe I'll try it again. I was like, what's going on?
There's something wrong, because you should definitely work if that's the case. I don't know. That's because the only reason it won't work is if you're too close, if you're below your opening level, or like it says, you're within 5 pips of the opening level, then it won't work.
Yeah, I did that, but okay, maybe hopefully
once you're above at least 5 pips from your opening level, you should 100% be able to move your stop loss to the opening level.
Is it so? So just going back to your whiteboard. So would you mind? Is your whiteboard still there, please?
Yeah, go ahead.
I can't see the whiteboard. Okay, yeah.
No, I'd wiped it out.
All right, okay. So my entry point was 1.2032.
Yes.
And my stop loss was 2012. Yeah. So I've now moved up 15 points, or 15. I'm on, I'm in 15. I don't know how to describe it.
Yes.
So what
so
I
you're
need.
Here.
Okay, so I'm there. So I need to move my stop loss up to my buy, and then so I would change my stop loss to 1.2032. So it's as simple as that.
Exactly.
Okay, so I'm okay.
So yeah, so like you rightly said, and as we've shown you, once the market has gone at least 5 pips above your opening level, which is 1.2032. So once the market goes up to 1.2037 or above, you can definitely do that. Just modify your order, change the stop loss from 1.2012 and just change it to 2032. And you should definitely be able to do that.
Okay. I will definitely, I mean, it will present itself again. So yeah, so I'll try that.
Yeah. But again, even though I have noticed that I haven't been in a situation for a while that I've been able to move my stop loss to the open level. Although, because the market has been unforgiving.
It's been brutal.
Yeah. But yes, like I said, if you get that scenario, but obviously you have to make sure you're doing it in the right order. So obviously if you're on a sell trade, it's the opposite way. So if you're on the sell trade, so let me clear this. So if it's the opposite, if it's a sell trade and you sold at 1.203, I need to make my math simple. So 1.2072, let's use 72. So 2072. So if you sold at that level, and your stop loss would be obviously 1.2092. So once the market drops, was 207? Oh my God, this is why I try and make my math simple, but I've made it complicated. Let's get the calculator out. So
206
2072. So 2072 minus 5. So that's 2067. So once the market gets to at least 2067, that means once it has dropped at least 5 pips, again, you can move your stop loss to the opening level. And again, that should be, you should be able to do that easily. Just adjust, modify your order, change 2092 to 2072.
72, yeah. And of course, that cell is our exact entry point, because obviously we've already taken into account the 2 pips, which
Because you're right. That you're now looking at
that's our actual entry point.
Exactly. Yeah.
Okay.
Oh, just for everybody, I'm just using this as an. I'm not saying you should move your stop loss after 5 pips movement. I'm saying you should wait till 30 pips. We're just talking in general that once the market has moved at least 5 pips, you can move your stop loss to the opening level. So the scenario you had where it had moved 15 pips in your favor, you're well above 5 pips.
Okay. Let's hope the market presents itself with something good today.
Amen. Okay, the market has actually formed the market resistance. So you can see here where the market has gone up. Where is it now? So the high. Oh yeah, so you can look at the data window. So the market has formed a high there of 1.20817. So you round that up to 2082. And then you can see here where it's spiked that high point and fallen back down, obviously. So that high then is 1.20822. So again, you can see it's in fact less than 1 pip difference. So market resistance is formed there at 1.20822. I'll just, because I want to be a bit more cautious, I'll round it even up further to 2083. Which is which? Let me do it properly now. 2083. So that's now the high point, but it's actually now the market resistance. And the low there is 2075, 2075. Actually, it's also formed a market support. So 2075, 2075. Low. Okay. All right. So that's interesting. So the market has formed a market resistance, and it's actually formed a market support. But I'll leave it below R1. Let me just be cautious. So actually now we can place a buy order just above the market resistance. So we now have a buy opportunity using the market resistance. So now we can place a buy order at 1.2085, 2 pips above the market resistance. 2085, stop loss 1.2065, and profit limit 2085 plus 60. 2145. 1.2145. There we go. So now we have a buy opportunity. So I'm going to buy just 2 pips above the market resistance, 20 pips stop loss, 60 pips profit limit. So for the buy, I'm using the market resistance strategy to buy, using the market resistance strategy to buy 2 pips above the market resistance. And then for the sell, I'm using the pivot point strategy to sell just below R1. So I'm using 2 separate strategies to trade the euro US dollar. The market resistance itself to buy and the pivot point strategy to sell. And again, this is actually another good example, is that if there was a report coming out and all that, again, I will not use that market resistance. So usually when leading up to reports and all that, and around reports, I'm extremely conservative and extremely cautious. But on a day like today, where there are no reports, no public holidays, nothing, and there are no interest rate report coming out later in the week and all that, once I see an opportunity, I'll take it. You know, again, I know trading is high risk. I know I'm going to lose money regardless of what I do. But again, you have to take your opportunities when they come and thus apply. Again, that's why money management is a key to trading. It's just making sure you apply good money management. So again, yes, that's why I wouldn't hesitate to use that market resistance to buy. And, you know, the R1 is close enough to the market to just leave my buy sell order below R1. So again, yes. So like we said earlier with Bola, you just take each day as it comes. You decide what you're going to do on that day trading based on the scenario of the market. You have to take everything into consideration. Is there some uncertainty? Has there been a coup in America? Is there civil war in America going on? You know, is there some trade war with China? You know, is North Korea threatening to launch a nuclear bomb? You know, so you just have to take everything into consideration. Is there a report of high importance today? Is there interest rate decision coming out later in the week? Is there a public holiday? Every day you just have to see what that day is presenting, what the scenario is, and then you decide if you're going to be extremely cautious or if you're just going to go ahead and take your trade, or you're going to be extremely cautious. So every day you just have to judge it on its own merit. But it stays like this. I like trading because when there's nothing afoot, I'm ready to take any opportunities that comes, and of course, apply my money management. All right, any more questions before I let you guys go for breakfast? And I go for breakfast myself. Okay, so if there are no questions, I wish you all a very good day. Enjoy your breakfast. And yeah, thanks again for the questions, Bola. Like I said, I love those questions and I really encourage. I love getting those questions. It helps with the teaching and the learning. And that's the best way to suck out and drag out everything in my head. So keep those questions coming, Bola.
Okay, thank you very much.
Pleasure. Have a good day, everybody.
Yeah, have a good day, everyone. Thank you.
Take care. God bless.